Hello, everyone. Get a 5x5. How you guys doing? Hello, GK. What's up, Ninja? Thanos. See if we find another Thanos Sibby today. What's up, Future? What's up, Dev? Hey, Jennifer. All right, so we'll get into this. We're looking at NASDAQ. We just had 8:30 news pump us up. Okay, so if I zoom out and actually I want to go to the 15-minute. What I want to do here is I want to add new day opening gap. Okay. First and foremost, our priority is liquidity. We have, as marked here, Asia high right here. This level is 20,645.5, and then London right below it is 2668 even. Okay, and below that we have this low that was just made right here, London low right here, Asia low below with a bearish trend. Okay, and we're in this kind of consolidation after, whoops, pull this back up. Hold on, guys. I accidentally just dragged my 4-hour tab. But while I do this, I think you guys are still looking at this screen. I have to drag this back. Put this in here. Thank you. Okay. Apologies. Now we're good. All right, let me just make sure you guys can still see the chart. Cool. So again, liquidity on both sides. Right now, to start the session in about 10 minutes in the opening range, we have the new day opening gap for today. Obviously, we closed below that and are rejecting off of it. On the 50-minute chart here, we also have this BISI, this high probability bearish inversion, with now this SIBI, right? So all that to say, this is really the line in the sand. If we get above it, I'd favor buy-side delivery and see if we can get up to that Asia high. But really, I would like for this morning to be a good session, a probable session where they're moving around. I want to see some volatility early on and run one side of this range and give me a better picture, especially after this 8:30 just ripped us up and brought us now right back down to midnight open. Okay, just kind of the 15-minute chart here. Now we'll go top down real quick. Got all of this sell side we've cleaned up here very nicely. So again, it's a Friday and we just took out major objectives. Okay, and we still could get some sort of, if order flow, supports this, some sort of move up to Asia high and maybe even a deeper retracement. But the fact that we fell just short of London low here, again, 2657 and Asia low down here, 261275. I need to wait for one side of this range to be purged, and we shall see, right? Literally, so we're on the 1-minute chart. We're in the Asia range and the London range still. We're just moving sideways, okay? Back up to the 4-hour. So this was the BISI we initially mentioned to start the week, and we did see rejection off of multiple times. Why is this a high probability inversion? Use it to go higher. And then this second one, this lower one from February 3rd, 2 a.m., used to go higher. We mentioned if we get below that, can it send us to this sell side liquidity pool right here, the relative equal lows on the daily? And it did just that. Rejection off of this death candle right here, and this breakaway gap. Okay. And we know breakaway gap anticipation, the high probability inversions are an integral part of that. All right, so now let's just scrub back. We have 24875, almost equal lows here. If we do want to make another leg lower, but more so for 9:30 open, we're just in this blocky range, so we'll see what we get, what we can work with. Okay, to the downside, it takes off the chart, but if we can close below this, again, I mentioned I want to see some movement to start the day to show me a clear picture on where the manipulation is occurring, and B, that it's not just going to stay in this range with liquidity on both sides and stick to midnight open and the new day opening gap. But if we can get below here and bleed, can we just go take care of the sell side here? Okay. Let's look at S&P. ES, look at the bounce here off of new day opening gap and midnight fair value gap. It's probably random. Okay, still now. So this is engineered sell side. Whenever we see these signatures, I know we see them often, which is why they're so important for what I kind of refer to bias footprints. Okay, so I'll point them out every time just to keep training our eyes, our brains. But I'll expect this to get drawn towards. And as we can see now, on the S&P here, and even on NASDAQ. Let me finish up on NASDAQ. This is engineered buy side, short of new day opening gap and midnight fair value gap, relative equal high, and it's kind of funkier trendline liquidity here, residing within the new day opening gap. I think this is engineered buy side. I think we can and we will revisit the new day opening gap. It's just a matter of if they rip it down first, and that kind of brings me to ES. I would love to see them, because it's just cleaner. I would love to see them leave this stuff, the buy side liquidity, run these lows, okay, maybe deliver to midnight open, upon 9:30 open in about a little over 5 minutes, trap short, similar to, was it yesterday or 2 days ago? 2 days ago. Run that lower, trap shorts one more time, and then just rip all these highs. So we'll see what we get. The biggest question I'm always asking myself for opening range, I've talked about it before, is what kind of manipulation are we getting, right? What is the market telling me? Is it telling me to continue to wait? Is it telling me there's been a clear liquidity sweep, right? Deliver to key opening price like midnight open. Okay, start to build our narrative and look for these algorithmic footprints. You see, we just put an equal low right here. Probably purge this, but and we're in this large news fair value gap right here that it's in inversion now. I don't want to keep that on my chart, but blocky, sticky delivery since this high was put in. Sneak peek, Ninja said. I missed that in chat. Yeah, so what I like about, so this is, all these things are on the indicator that will release soon. You guys have probably been, to be honest, and me too, it's just tedious and annoying, and just as a trader, having to mark out, especially on the 1 minute, like going back and marking out the new day opening gap, but things like the midnight fair value gap, all the key opening prices, where like this morning, now for my pre-market routine, not to rush it or half-ass anything, but it just puts all this stuff on the chart. I don't have to draw it out. I don't have to change the colors. I don't have to go to dash line, do all this stuff. It just helps me quickly see, okay, this is where the significant highs are, significant lows, key opening prices. And then it's easy to toggle off certain things. Like when I'm on the 15-minute time frame, I'm not going to be like looking at macros, right? So I can toggle that off. It's super easy. And it's all in one thing. So what I love is, especially with like new day opening gap, new week opening gap, right? We have the midline. So if you toggle on midline, it's 50% real nice. But what I love is the quarters here, right? So it puts on 25 and 75% real nicely. And then if you just hover over these, right, it shows the levels here too, which is awesome, right? Midnight fair value gap as well. And what's a cool little, there's a couple cool little, I'll call them signatures, right? The midnight fair value gap right here. See how it has that upwards triangle right there? That means it was a BISI, right? When it was formed. If it had a downwards triangle, it means it was SIBI, just so we can kind of get a little more information on that, as well as the 930 fair value gap. We'll have that. And again, like if you wanted to toggle these and make these, solid instead, whatever your preference is, little things like I mentioned this, if you toggle this off, you can go back and it'll show macros, right, that have already taken place. I'll typically have this off, as you guys will probably see, like unless I'm looking at review or like I'm specifically saying like, okay, this is beneficial for whatever I'm trying to describe, where we're delivering from or something. But if you just toggle it off or toggle it on, remove intraday macros, it'll take those off just for clarity, which I like that as an option. And then it'll just, we'll see at 950, it'll just boom, macro open and chart it out with the box, right? And then also for your preference as well, if I bring it back up, I know some people like this where you guys typically see me drawing it out with, of course, macro opening price. That's crucial, but then just the box below. But I know some people do like this, where instead of a box, you can do backgrounds, and then you can change the colors as well to make it just faint. If you'd rather that, and then take off the text, and that can be your macro window, right? So a lot of flexibility with this, which I love. Again, I do prefer the box, just my preference. And let's put the text back on there. A couple other things, like if you look at the text for the macros here. So macros, you'll see these macros, liquidity pools. It literally has it all in one, which is so fire. And then key arrays here, new week opening gap. I don't have it toggled on because we're way below it, all the way up here. But new week opening gap, same thing. It's just fire with the quadrants. Or if you don't want the quadrants, you can just take it off. So here's 930 open. Again, we'll just kind of talk about this as the opening range plays out. I want to see some movement, as I mentioned. And I also know, just real quick as I watch this open, like with specifically lunch, I know a lot of traders use different times. So you have the option to change this, because I've seen and heard ICT say his lunch session is 12 to 1, and then he'll say 12 to 1:30, or now I think he's saying like 11:30 sometimes to 1, right? Me, I just want to keep it simple. I use 12 to 1:30, but again, you have the option of that. You can control the colors. Any of these things like here, these are just tool tips. So it just tells you what it is, colors, timing, name, checkbox. And then let's see if we get down to London low. So historical right here. So right now it's just plotting today's new day opening gap. And if I do historical, it goes back one day, this is fire too. And it plots yesterday's new day opening gap somewhere. It should somewhere. Right. So where is this? All right, it should somewhere. I'll double check that with the dev. But with these, you'll be able to do like last 2 new day opening gaps, last 3, whatever, and then they should extend all the way out here. Okay, so we'll see as we get London low and Asia low right here. We're leaving behind all this buy side, and now I am going to clean this up. How's everyone doing? Good? Let me check on S&P right side here. I forget I have a tab open right here. So ES down to London low. Asia low, SMT at the moment. So this is super nice too because it's just charted. Like NASDAQ took out Asia. S&P has not at the moment. See if it plays catch up. But see as well, like right here, it's forming the 930 fair value gap as it forms. Okay, so we know not this one. Can't be the first 930 exact 1 minute candle, but the second one. So that just formed. And again, like the midnight fair value gap, as you can see, it's a SIBI obviously, so it has this little down arrow. So if we drag this out like later in the day and we can't see the actual SIBI here, it just adds a little more context for us. So now the question is, we're going to come down to 24875, the relative equal lows from end of October, beginning of November. Clean highs. Yes, down to Asia low. So this has been the theme, huh? Just throughout the whole week, just dump it. Add open in the opening range. Nice close below, rejection off new day opening gap on S&P. See what it does here at this 930 fair value gap. Lose my voice. I was up so late at a soccer game in Miami. Got home at like 2 a.m. Looking at this candle's close. See if we can get above the 930 fair value gap. If it doesn't, we're strong. If we leave this busy, it would be nice to see this remain open as a breakaway gap. You guys know how we internalize price here. Look at this little SIBI that was used to send us lower. If we get above that, including the volume imbalance, can that rip us all these highs? New day opening gap first, really, and then see if honestly it'd be real nice if we got up to London high. Okay, there we go. Rapid movement here, but again, the logic, this is what we discussed, I believe, Wednesday, where especially if they have all these highs because liquidity is priority, rip it down, trap some traders, run session low, and then reverse it back up. Keep people guessing. So similar to Wednesday as well, we'll see if they They did run it Wednesday. It was just a little blocky in the opening range, if you do recall. We'll see if they rip it up nicely or they chop us around now. Okay. But even, this logic fundamentally is still good to and extremely important to ponder on, to review, to study. S&P. See if we can get above the new day opening gap. What we will just kind of keep an eye on here is, because it's such a large fair value gap, the news fair value gap, I'm just going to draw this in here. If we can reclaim this, if we get up there, does that send us to the buy side here and all the highs? Okay, ES already did get its session highs, so we have a little SMT up there. There's just a lot of clean liquidity here. Working this SIBI turn inversion now. The priority is on the 930 fair value gap. It would be nice to just see it just expand and rip all these highs as we mentioned. This is staying open at the moment. Time, price, patience. Am I any good? What position do I play? Center, mid, striker. Sully's the glory days. Yeah, me and Sully played together in school. We got smoked first round, and that was so bad. Sully, we had a chance that game. This moment lives rent-free in my head. It was 0-0, so we barely got into playoffs, or what they call the tournament, and we were like the last or second to last seed, so we're playing the best team in the conference. And for the first half, we were neck and neck. We were holding our own. And I put the ball on a dime. So you remember Victor Santos? I put the ball on a dime for that kid 5 feet away from the goal, and he just let it hit his foot and just rolled to the goalie. I was so mad. And from there, it was all downhill. But yeah, I love footy. The league I play in last night, it's a futsal, if you guys know what that is. So 6v6, and then when I play on Tuesday is 7v7. It's outdoor, but it's not popular. You're correct, Sal. So we're returning to this 930 fair value gap. Remember, don't rush any trade, but especially on a Friday. Okay, think about it this way, especially if you've been struggling, your goal should be I want to take the best of the best setup today. If I had to take or could only take one great setup today, would this be one? For me personally, no, I want to wait. And if you just have that mental framework, you're going to trade a lot better. Okay. Came up into this inversion here on the 5 minute. I played so bad last night, though. So bad. Okay, this is a good reaction, obviously. Failed to fill it in its totality. Again, if we are going to run this now ahead of the macro, if we revisit this high, we want to see just do it with speed, right? Because there should be no reason for us to slow down if we are going to run these highs. There's just a bunch of highs. If we get below all this structure now, this is problematic, and we'll probably just make another leg lower. But we have this order block nested in the 930 fair value gap with a bunch of highs. Let's see. So we ran this high. Do we have any reaction? Let's check S&P for an SMT. We do have an SMT. We want to see ES play catch up above this new day opening gap. See if we can get above that SIBI. Okay, there we go. That's what we're looking for. So now, running some of these highs, can we get a close above an expansion, obviously, but we need to get a close above this new day opening gap. So the new day opening gap is Thanos for today, for the morning. Okay, someone tell me why this order block is significant. Right, it's nested in that 930 fair value gap. And note how we did wick down here, but it's still a breakaway gap if we don't fill it entirety. Really nice here. We'll see now if they bring it down, or I'd like to see if we can get expansion through this to the session high, and ultimately, obviously this high as well, but fell a tick short, 2 ticks short of the upper quadrant there. It's 945. Keep that on for 1 second. Obviously, a couple minutes till the macro. Still rejected. So look, midnight fair value gap there, and the high of this news fair value gap. Inverse this. Now, if this inversion send us below, and I guess even more from a micro level, if we can kind of displace their mean thresholds, it's problematic for the longs. See if we can get a close back above this. Still left these highs with the session highs, revisiting the new day opening gap again. So we see why that order block is important. Again, on that retracement. Yes, a little funkier. One minute till the macro. Just scrub down here real quick. Okay, let's see what, I'm going to delete this. Let's see what macro signatures we get now. I guess we'll keep this order block on for now, since we have a lot here. So this is easy too. Like if it's ever blocky like this, I can take off the display and like 9:30 open since they're overlapping. Trying to get back up to new day opening gap. ES as well here. Work that small 930 fair value gap right at the start of the macro. really not much for me to comment on. Just checking on 5 minute. Only thing is if they run this low, is there any reaction? And then higher. This order block is bullish Thanos. It's Captain America saving the markets. But blocky here since this run up, pretty blocky. S&P expecting CE of this reclaimed SIBI. If we get back above this, we'll see if then it can finally rip as a reclaimed high probability inversion. And if it doesn't, then this is, I'm incorrect about this PDRA significance. It comes off and we'll just focus on the new day opening gap anyways. And 30 fair value gap. Needs to get above here. Look at the bodies respecting 50%. Okay. Working the structure here. See if there's any sensitivity. Honestly, at this point, let's put our focus on this 930 fair value gap. Only thing is if we leave a SIBI here, we still have to wait another candle after this. And you guys know I'm the jinx master. I probably just jinxed it, but could we inverse that and then go higher? We shall see. You guys hear that noise in the background or no? Let me know if you can hear a noise in the background. All right. Thanks, Chad. Excuse me. Clean this up as well. And I know I say this stuff a lot, but just to reiterate, like, if my model's not there, then I shouldn't be trading. So that's all trading is. We're waiting for this. Respecting the 930 fair value gap. Checking on S&P. S&P looks like an absolute mess. See how we respected 50% of that reclaimed SIBI? Yeah, I'm just going to try to clean this up. coming back down to EQ of this range, which is just the opening range. This is the opening range, dealing range. If we're bullish and we find support off this 930 fair value gap, close above this, we should rip the highs. Okay, and if that doesn't work, then I'll probably just wait for 1050 macro. So we're testing this. We'll watch both. ES here. Trying to get above this. See how it used it to go lower. That would be a high probability bullish inversion. And we'll see it's 9:59 in about 45 seconds. It should plot this as the opening range high and opening range low if I have it toggled on. Yeah. ES just taking off. There is a little volume imbalance right here. Okay, let's see what this market wants to do now. Do you want to go up, or is this going to become reclaimed SIBI? I want to see if we can just rip these highs. And in my opinion, if this inversion fails, it's obviously problematic for the longs, but more so why I mentioned if it does, I at least need to wait for more information, because what I often say is, like, I know what signatures I'm looking for in price, and if they're not there, okay, then I'm not going to take it. All right, I'm going to go break even on this. $700 on this. Okay, and I'm going to get out there at the new day opening gap. All right, so those are the best trades. And this thing, I want to see it continue to expand, but on a Friday, and also just for traders' expectations, especially if you're not profitable yet, like, see how, we built a narrative, and we'll still see if we can get up here and to and through the new day opening gap. And I'll show you guys my executions. So you don't need to, even though that trade was 50 points, you don't need to catch huge moves, right, to be a profitable trader. You just need a repeatable system, right? So see how the model just came to us, right? So this is a beautiful depiction of macro power of 3 and just algorithmic delivery at its core. There we go. There's the opening range high. So what's next? Can we expand to 664 and London high here? Okay. But with the checklist, macro opening price, so see how we're letting the model come to us, and if it's not present, we don't take a trade. Macro open, price goes below for macro manipulation, and what is it referring to? A significant inefficiency. And look at it respect CE. So that's why these levels are important. So again, like unless it's a tiny with the indicator, or if you're just plotting it yourself, right? Unless it's a tiny 930 fair value gap like ES. Like obviously I'm not going to plot CE of that. But I mean, you can eyeball it, but it's nice to see it respect this once, twice, right? Below macro open, and then your confirmation, your final confirmation for trade entry, and also just to kind of validate that this is bullish, we'll call it support, bullish signature. It's a closure above this SIBI, which is what, a premium or bearish PD array, right? So that close is the final confirmation. Okay, macro inversion, expansion higher, and see what's happening here. Okay, so again, digging more into this from an expectational standpoint, even psychologically, like in this moment, especially with these trades, like it feels wicked good when, if my entry's right here on this candle's close, and even it went down, got filled at like 82.75. So right here, okay, literally minimal drawdown. Sometimes this happens, and obviously that's best case. In that moment, it feels like, oh my God, it's gonna go up forever, right? Where if you're subjective and you're just content with enough, you know, sometimes it's going to continue higher, or sometimes it's going to come back. And if I was at break even, I would have, sold out on 50 points, right? So we'll still see the bodies are respecting this, but just more so like to say, don't get too high in the highs, too low in the lows, whether it's you're coming off a winning trade or a losing trade, or the hardest part is while you're in it, you're just trying to get your piece and then just be done for the day. Or if your rules allow for it, just wait for the next setup. Okay. But this is the model. This is what we look for. Right? Right at the start of the macro, adding on to, I know there's a lot of stuff in the chart. It's seeking discount. It's seeking a significant inefficiency in a discount, and it's running a low right here. And then this is your confirmation, your entry. Right? So in this trade, I had one mini on. If I had multiple contracts, whether it was micros or minis, it would be one off here and then hold runners and break even, and then the runners would be getting stopped at break even right now. Right? Because we know, A, we're sweeping liquidity. B, we expanded at that point, like, I don't know, 60 points or something. Yeah. A substantial amount. And we know we can reject in the significance of the new day opening gap. Okay. So we'll stick with this. I'll stay on with you guys. But is that making sense? Does that 950 macro make sense? We're still in it, but more so we see the logic behind 930 fair value gap as macro reference point. We've seen this again and again. It's in the recordings. This is one of the scenarios we look for, especially with the 950 macro, because we just know, unless it's more likely that we're just by the 1150 macro expanded away from the 930 fair value gap. Of course, it's not every time, but still now, if we can reclaim this new day opening gap, then can we make this, I would internalize this as just a deep stop hunt, just to go higher, right? To upset and frustrate longs before actually ripping it higher, right? But still objectively, there's opportunity in this, but we want to see us just leave this range, okay? And the argument for us not returning down here was that we've already swept the London low and the Asia low, so that kind of builds the initial building blocks for a bullish bias, right? All the buy side liquidity here, session highs above, which we still have, okay? We run that trap shorts, trying to chase right here, and then immediately recover, right? A little time distortion ahead of the macro, time and price signatures. Okay, so now gravitating back to this new day opening gap, let's check in on S&P. Okay, so this SIBI, objectively, this high probability inversion was not a factor there at all. So the focus is on the new day opening gap. Look at the signature as well. Macro inversion sent us to the highs. And recall this, I'm going to make it a little darker now. This is the high of the news fair value gap. So we deliver to that. We haven't gone close above yet. We'll watch here. So that SIBI used to send us lower. The SIBI from, let me make sure there's not a volume imbalance that I'm missing. There's not. SIBI from 843 coupled with, it's right on top, pancaked with that news fair value gap high. So if we get above that, we'll see if we can finally just rip these highs. Ultimately, we have this high right above. You can see ES, we already swept London high. Okay, so we have more engineered buy side. So we'll see if we can get up there. Close above midnight fair value gap. Next step, we need to get above the new day opening gap and run here. So going to get up there, there should be no reason for us to come back down. We should just expand higher. So, all right, there's that 7 a.m. high. Look at it work and respect this level here, guys. This is why these things are important. The midnight fair value gap, it's dragged across. Signatures. We know it won't always be perfect, but we look for these signatures to help us out. So there's that 7 a.m. high, 66475. Still falling short of session highs. And this has been the characteristic of the morning, it seems. Run highs and then just deep retracing back into the range and then try to recover. So new day opening gap still. If we are to get to the session highs now, I'd want to see the bodies respected on a close. Let's check on ES. Let's see if this candle respects it or not first. Right, but even look to below the new day opening gap, there's no inefficiencies, which supports that argument. The only thing would be, unless we completely reverse, which, objectively we still could. We've been so heavy, but we're seeing bullish signatures. The only thing we could do would be if the algorithm wants to seek discount, right below midnight open right there, and then maybe an inversion and reclaim the new day opening gap. But, I already have my trade for this morning, so I'm going to not look to enter anything here, but still stay on with you guys. Let's look at ES right now. ES is still rejecting off of this SIBI. It did get a close above the news fair value gap high. It's the news fair value gap low. And then we've been spending a lot of time on the 1 minute. So we'll just keep ourselves fresh and go back to scrub through the higher time frames, 15.5. Respecting this new day opening gap, returning to the midnight fair value gap. All right, can we get a close above these two down close candles? That would make this an order block, and we'll see if that can finally get the job done. Hi, I have one confusion, and I'm new in learning macro power 3, and it's really helpful for me. I do macro inversion only. In this trade, I did not execute because I noticed we have double bottom down 955 and 957 right here. Yeah, so this is a shallow stop hunt, but A, we do technically have a purge there. Okay, and B, it's the respect of CE, right, and the aggressive reaction. So 50% of this 930 fair value gap, that's an algorithmic signature. So we're not only wicking into that, but the bodies are respecting that, and then the invalidation allows me to reasonably say, okay, I want to take this. Okay, there we go. Bingo. Great morning. A little whipsaw action, but macro power 3 strikes again. Time and price. How you guys doing? Anyone take any of these trades? Any of this long? So I'm glad, like, this is objective as well. Like, I'm always trying to, sometimes it might seem like I'm a broken record, but A, it's because I'm looking for the same things in trading all the time. I'm like, sometimes when I sit here and I'm talking about the psychological aspect, I'm also just staying locked in myself, right? Like Wednesday, when the market just dumps, if I'm remembering correctly, I think it was Wednesday. Or no, maybe it was Monday. I think Wednesday was when we did get the move up, but it was just too blocky for my liking. But Monday, like whenever the market's just not showing me my model, sometimes it might be frustrating. It is for me too. Like objectively, I want to take great trades. I want great setups, right? As much as possible. Who doesn't? But objectively, like if it's not there, even if there's volatility and I can't find my footing where I would place my stop loss, if my model is not there, I try to weed out all the scenarios, especially if I'm trading the 1 minute where I'm trying to just guess which order block is going to work, unless it's a high probability order block and we know how to classify that during a macro, right? But I'll have to say, like, if it's Monday or Tuesday, Wednesday, whatever, and we're not seeing models, like especially on stream with you guys, it's frustrating. I want these types of clean setups every single time, but we know it's just not reality. And this is at its core, like where patience will pay in trading in general. So like if this morning we didn't get a great setup, like the model come to us, it can still come at 1050 or 1150 or whenever. You guys know the macro power 3 checklist. Okay. So still study. What did we mention here? And this is why it's important to have these levels on your chart. Close above. What did we say? The new day opening gap should send us to the high here. Midnight fair value gap should send us upwards. Okay. And recall just understanding what price delivers to inefficiency or liquidity, right? At that time when we closed above, we mentioned we had nothing below here, right? The only argument would be if it wanted to come down for a discount of, at that point it was this high, to seek discount in midnight open, right? But think like the refined dealing range logic, it doesn't even want to go down to a discount because it wants to go complete a buy side premium objective. Okay, so still now just kind of updating. it is cool to see this small inefficiency still worked. It's fascinating. We did just take out, as I mentioned, let's go top down. We took out some of that buy side liquidity and the sell side. So now, like, I would say be cautious. What would be nice is if we see bullish, if we stay above the new opening gap and we see some expansion just for favorable conditions, in my opinion. Let's kind of just zoom out. We have this 15-minute SIBI here. See if we have, well, we must because we had the large dump, but so we're working this hourly SIBI here as well. Now this is my hourly refined dealing range high. We can break this down to here. If we do continue higher and see large expansion, equilibrium of this range. So I'm using the high at 1 p.m. yesterday to the low made this morning, just for clarity's sake. You can see 50% is right around 20,788. Okay. Midnight fair value gap, is it referred to the first fair value gap after midnight open? Yes. So same thing as the 9:30 fair value gap, but just midnight. Tim, is your trading session limited to a specific time? Yeah, so I'm not a London trader. Really, and this is the power of like having the macro power of 3 checklists. Like, I often get questions like, what's the best macro? What's the worst macro? I want to see it for New York session, obviously just happen early in the day because that's the power of trading. You can just get this trade and then go about your day. But it's what everyone fits the narrative for that particular session. But majority of the time, yeah, I'm just trading New York open, AM session and or PM session. Nice morning, great trade, liquidity on both sides, wait for one side to get purged. Right, yeah, so this is what we talk about often. Maybe it's, right, zoom out here, right, to start the day, building a range, accumulation, manipulation, distribution. This is when we can get the best setups, when they build equals on both sides. You just have to wait in between, right? The best setup's going to come after one side is purged. The best delivery in general too. Okay, we're delivering back down to this new day opening gap. Version here. Okay. Checking on S&P. I'd more so want to see if what they do with the new day opening gap, if they could reclaim this and then make another high, but we'll see. There's not much to work with in here. But now let's adjust our range. Just got discounted this refined range. Close below the new day opening gap. They'll probably at least rip us down to this midnight opening price, and then I believe at 9:30 opening price is right here, but this order block, I want to see if there's any sensitivity there. Let's clean this up. If we close above this, we'll have a reclaim BISI with these 3 consecutive down close candles. See if that can push us higher or not. And if this bullish, if that occurs and this bullish structure fails, then we'll end it for today. But some good delivery and good takeaways from today. we did reclaim that with the order block. ES got its 7 to 9 a.m. high, but fell short of that higher high there. See if they push us up now. And again, if this, we need this to be our Thanos, our bullish Thanos for today. So I didn't take this trade, but these are signatures in order flow that we're looking for. Let me just make sure I'm not missing anything up here. 5-minute high there. See if it wants it. There you go. Random. Okay, you guys see how, do you guys understand the logic of what I just described right there? Does that make sense to you guys? Beautiful. So like, it's hard in these cases. Instead of, this is where like, we can't just be pattern traders. We need context around it. So this bearish inversion we closed below, but we have the new day opening gap and the midnight fair value gap. See the bodies respect that once again. Okay. And then below that, we already mentioned there's no inefficiencies. All the way at the low, we already swept Asia and London low. This was a breakaway gap we mentioned, right? So we don't want to see it return here. This delivered to 50%, the 930 fair value gap. So we don't want to see it return here. The bodies respected the inversion, so we don't want to see a return here. So what did it do? It just seek discount, reclaim the, we'll call false bearish inversion with the order block and rip the highs. Right? So we have, again, trading is just probabilities. There's, with our skill set, reading order flow, there's really nothing for us to do down here. Okay, so instead of just rushing in because we want to push the button and we have FOMO, it's going to dump without us, the better scenario would be to wait for what we just saw play out here. Go lower, close above, confirm that bullish order flow is still in the market and that this was just a retracement to discount of this range. Again, the high to this low right here, last low nested in this BPR here, which is the algorithmic signature. So we can use that for a refined dealing range, get 50%, midnight fair value gap, new day opening gap, confirmation, expansion. And what do we always mention about delivery relative to reclaim BISIs and SIBIs? Someone tell me. What kind of delivery do we want to see? If we're correct in the significance, right, explosive, speed, quick. Because this is showing us, okay, this was just a retracement to discount, as we just described. Reclaim, there should be nothing else for us to do. Right, we already spent a lot of time at the new day opening gap. The body's respected, expand. Next leg up. Okay, so that's going to do it. I hope you guys enjoyed and got some takeaways from this session. I had fun. Good way to wrap up the week. And again, if you guys like took a winning trade or, you know, you're coming off a winning week, don't push too hard on Friday. You don't want to have to sit with that the whole weekend, right? Just be content with enough. We'll study this price action. We have a review tomorrow at 10 a.m. I believe that it was 10 a.m., 10 or 11. Let me check. Yeah, 10 a.m. And that will be recorded for anyone who can't attend. But, you know, macro power of 3. Let the model come to us here, right? Let it come to us. And everything else besides that can just be noise, right? We need to control what we can control. And that's our patience, our discipline, waiting for our model to come to fruition. So Enjoy the rest of your Friday. Be safe, be disciplined, and I will talk with everybody soon.